And thank you. I'll give a little, I guess, commercial for the UK. I mean, in the sense that we have been moving forward under, I think, called the ROC regime, a green certificate regime for many years, building more and more onshore wind, offshore wind, waste to energy. We have a fairly clear set of regulations, for example, on waste to energy, where there's a thing called the landfill tax, which is increasing and now at about £80 a tonne, which is designed to make the cost of burying things in the ground, which shouldn't be buried, a very expensive thing to do, which is a great piece of policy. It provides what I think of as TLC, which is transparency, longevity, and certainty. We covered that, in maybe one of the earlier ones. But we're about to go through a quite significant restructuring of how we think about this with a process called EMR, which is the Energy Market Review, with a view to stimulating even more low-carbon generation. And in this case, we are switching our green certificate program for contracts for differences, effectively a fixed price, which will guarantee for renewable generation 15 years. Now, there's not many businesses that you can look at today where you can guarantee from a project the revenue level for 15 years. And it should give a lot of that transparency and certainty to investors coming in. Now, if we're investing today at 40 to 50% of the level that's necessary to hit the 2020 goals, that money's got to come in from other sources. The utilities are investing at very decent levels, but they're capped out in terms of what they can do. So it's going to be foreign direct investors, it's going to be institutional investors, and giving them that certainty around the revenue levels. They'll take a little bit of development risk, they may take modest amounts of technology risk, but they absolutely do not want to take pricing risk when you're committing to assets which have a 20 or 25-year life. Now, one of the challenges, of course, is getting the debt that matches that. So with our long-dated assets, and you need long-dated debt to make all of that work, and the crisis in the financial markets has meant that folks are willing to lend typically now on shorter periods, and that's one of the reasons that we've come in. We've come in to try and help provide capital on a long-dated manner. We'll do a little bit of that ourselves, but what we're really trying to do is stimulate other solutions for that. Let me give you an example. One of the projects we worked on in the first 6 months of the bank was to create a listed fund that would invest in renewable energy infrastructure in the UK. We found a team that had tried this before. They hadn't been able to raise the capital. We decided to back that team. We helped them think about how they should restructure that offering. We brought them from offshore UK, they were based in Guernsey, to onshore UK. And the team went out and with a 50 million cornerstone investment from us and a restructuring and restatement of that risk, they managed to raise over £260 million in what was the biggest IPO just before April. In the 2 or 3 months since that was successful, there are now 6 or 7 Me Too products out in the UK market trying to list on the main exchange in the UK. And so the amount of capital that's now coming from that deep pool of capital that could only invest in listed equities that wasn't really able to play very easily in closed-end infrastructure funds is now significant. So that's some of the types of things that we're looking to do. But the UK is a great place to put your money. It'll be even better after we get the EMR process completed. Well, it'll give a lot of certainty on revenue streams. And we're here to try and invest alongside new investors into the market.